Everyday Americans are struggling today because of the high cost of everything, whether it's inflation, it's credit card debt, it's medical bills, and retirees make up a big part of our society and population. And those retirees are not struggling like the rest of Americans because of overspending. They're struggling because everything actually costs a lot more. But a reverse mortgage can actually be a pressure releasing value tool. Now, first, let's look at why retirees are carrying so much debt. Well, for one, and the most obvious, they have higher medical costs. Costs in this country are not coming down, whether it's for drugs, treatment, even just doctor visits. Everything in this space is going exponentially higher. Rising credit card rates over the last few years have been crippling, with the average person who's carrying any sort of credit card debt paying over 25%. Another thing that is affecting retirees today is the 30-year mortgage that they took out a few years ago or have refinanced isn't paid off now. So they're saddled with that monthly mortgage. And then lastly, they are on fixed incomes. There's only two ways to really tackle debt. One is to restructure it so that you can actually chip away at it faster, or the other is to increase your income. And seniors just can't do that. So here's how a home equity conversion mortgage solves all of this. You have no monthly mortgage payment when you actually take the draw or lump sum. And that's just what makes it cool. You either have access to doing monthly draws or treating this like it's a large line of credit, or you can get one big lump sum and wipe everything out. Pay off the mortgage, wipe out all the medical debt, pay down or off the credit cards. And that's what makes this tool so powerful. It gets such a bad rap, and there's so many misconceptions and myths and negative rumors that you're going to lose the house to the bank, which is not true, or your children are going to inherit this debt, which is not true, or that you can actually go upside down and owe more than what the house is worth, which is also not true. Reverse mortgages are some of the best kept secrets and weapons for people at these golden years in their life to be able to actually enjoy them. So here are some realistic examples. Someone wiping out $60,000 in medical debt. Imagine being relieved of that stress. Someone freeing up $2,500 a month because they paid off the mortgage, or someone paying off $50,000 in credit card debt over 25% interest. Just imagine how much better you'd sleep knowing that these things were no longer. Now, financial planners absolutely love this tool when it's used correctly. For starters, it extends retirement income. It reduces portfolio withdrawals, which your financial advisor doesn't want you to do because they want your nest egg to continue growing. And it improves long-term financial stability. Now, on the other side of this, here is who a home equity conversion mortgage is not for. People who want to leave the maximum amount of equity to their heirs or children. People who plan to move soon, or homes that just don't have very much equity. So there is some qualification for this and a filter to make sure that it's actually the right product for you. But again, most people are sitting on the solution to all their problems, and that is their home. With home equity being at an all-time high here in the United States, this is something that people at that age of 62 and older should strongly consider and look into as a solution. So if debt is crushing a retiree's lifestyle, then this product makes a lot of sense. And it's also going to be the easiest way to reset the financial board and enjoy the years that are left.